Hey, it's Mac with PriceActionTradingSystem.com, and it's Monday. It's March 30th. This will be our chart lesson for today. We had a pretty good rally today. Actually, a real good rally. I shouldn't say pretty good. We had a really good rally today. We went flat for quite a while here. This is really from about 10 o'clock till maybe a little after 1 o'clock. So we spent a great deal of the day in this really tight range, and this is hard to trade right here. It's just really hard to trade. Still a little bit of an um, upward trajectory until about here, and then it was really down for a little while. But you can see we're still in this range, and the resistance, we had a little failed break here. We had a little failed break out the bottom down here. And then eventually we had this failed break out the bottom that led to the market rallying again. And that's why I always tell you these failed breakouts turn out to be important highs and lows. Notice that was a fairly important high at the time because it was all downhill for several hours after that. And then this failed breakout down here turns out to be an important low because that turns out to be the low for the rest of the day, and we rallied fairly strongly into the close here. So those failed breakouts are generally important in lows and highs, so keep that in mind. I'll talk about that a little bit more in a minute. I know this looks a little messy here. I just wanted to put this red on there because somebody else sent me this earlier this morning, and you could have looked at this like a little spike and channel, and that line's coming into play fairly well up through there. Um, Technically, I like the blue one better with the break, and then of course we had the move up to a new high, and then we corrected there. But you still get the same thing here. You get the break of the red one a little later, move up to a new high, and then correction, and then we started another trend. But you can't really see it in here. You will want to back out. I like to play in the shorter. You really need to be playing the shorter term stuff anyway. So no matter how you had your bigger channel, you needed this darker blue channel right here, and you needed this lighter red channel in here. So, but looking at this the way he looked at it, you did get maybe an extra setup or two here with this. So if you saw it that way, I don't see anything wrong with that. But that's not the way I was looking at it early. Most of the time, uh, you won't find your channel starting off the closes like that. You're going to find them from the very low and off the first swing. Uh, Obviously, that's not the first swing, but that's the one that set the channel or the trend line is the way I saw it. And neither one of them really helped you with a midline or this upper high. So it really didn't matter which one you used. In fact, if you'd used the red one, you might have got a couple of extra trades in there. Again, I think you can find those without by going to the shorter term stuff. So um, this was where that one setup came, and really you got an inside bar, and your signal bar is a big bearish. I'm not crazy about that. It gives you a second opportunity here with a higher low, which I'll show you that. Um, you can see this higher low. Is that it? Yeah. Okay, we got our break right here. If you'd have drawn this trend line, my line bounced off that. That's really an inside bar. This is technically your signal bar, but they make batching lows, so you could use that one. I think you're better off to wait on the higher low here because you're still in this channel. There is a little bit of an overshoot there, but it's just the fact that when you get this higher low, you still got a long way back to the EMA, so you got plenty of room to scalp out. Even if it goes lower, it's probably at least going back to that EMA. There's even actually a reversal pattern right here. Notice how it pushes on through, pulls back, gives you a failed second entry short, and then it takes off. So you could have entered on either one of these and still got in on this. You wouldn't have got a runner here. You would have got one here. You wouldn't have got one here either because it comes back. Now this is the only one you would have got a runner on. So, and the other place it came back was up here. And that's your first break of this red channel here. Let me make this a little darker now that we got the other stuff out of the way. Actually, it's a brown. It's kind of a reddish color. I just try to change the color sometimes just so they're a little easier to differentiate. But you can see that trend line working up there. What we did was we had the break, and now we're headed to a new high. And you don't, a lot of times it'll be two legs up to a new high before it kind of corrects or whatever. This time we had one big move with multiple swings in there and then another one. So really all we did was went to a little different angled channel here. It's not even really angled much different. If you notice, if you take that trend line and move it over, it's almost exactly the same as that original one. So it doesn't really change it much there. But we just went into it. But you can see the resistance up here on this side is fitting nicely. So, but we had our break here, and this was almost an identical setup as this one down here. You get this little inside bar on my chart anyway. Again, you're way away from the trend line, and this is a second entry long right here. Notice this swing high, it's new, it's higher than this one, so that's a new swing high. The count's 0. And you come down, you get a first entry, and then you come on down. So that's a second entry long right there, but it's an inside bar on my chart. I don't like it. We are a little ways away from the EMA. But this is a definite inside bar, and it doesn't have a matching low. Again, you're better off to wait on a higher low, which doesn't come till way up here. But let me back down to here again and talk about this failure. I get a lot of questions about failures. I talk about them a lot during the chart lessons, but what I wanted to make sure people understand is that we have people at every level watching these chart lessons. And if you're new to this, and you're still trying to get a grasp on second entries, don't worry about failed second entries, because all you're going to do, there's a reason I don't talk about those and teach them in the manual, because it's too confusing for people to try to figure it out working from both directions. So concentrate on learning the second entries, and once you learn second entries, the failures will become almost automatic and easy to spot. But trying to learn them both at the same time, it's a little bit difficult. So, but the thing I wanted to talk about today with traps, and basically a failed second entry is a trap. It traps a lot of traders in the wrong direction. And so when you see a trap setting up, or you think it's a trap, ask yourself, if you thought this was going to be a failed second entry short here, ask yourself, how many people do you think are going to get fooled into going short here? Probably a good many, because we're trending down now. That's your first correction. It is a second entry short. So there's probably some people that are going to get fooled there, especially new traders that are just looking all over the chart for second entries. They don't really understand that you got to find the context for second entries. That, just because there's a second entry doesn't mean it's a good entry, basically. So it has to be in the right context, and the setup has to be good as well. In this case, this is a second entry short. Prices had been working lower. The problem here, though, is you got a second entry. You pushed up through the EMA right there, and this thing should have probably turned down underneath the EMA, but instead it pushes right through. It doesn't really get any resistance there, so it's almost acting as support. So when it breaks lower and fails and instantly turns and goes out the other side, that's a good sign. I'm probably going long, and you'll get your feedback on a trap by how fast it shoots up. Like, see how fast that shoots up right there? I mean, this is a pretty good example, one that shoots up pretty quickly. Here's one where maybe a first entry, second entry, and it breaks higher, but notice that doesn't take off. It didn't trap any. It didn't fool anybody there, really. Another thing going on right here is you got a lot of buying coming in, but this was the overnight highs, and there's a lot of resistance right there. So the buying and selling is starting to equalize right there. Instead of, it should have come up here real quickly and turned down like it did here, and when it doesn't, that's a concern. You still got to be careful getting long into that, but it's a concern when it doesn't get rejected pretty quickly. It tells you that there's a lot of equilibrium there. Notice how there's stems on both sides, and you're just kind of going sideways. You're better off just kind of sit and wait and see what happens than trying to get long or short, because either way you do it, you're probably going to be wrong. And notice how it did fail. Even though you could have scalped out of that to the long side, it's not worth trying to risk it. And it did fail almost instantly, even though in the end it went higher. And that's generally what will happen on a breakout. It'll fail first, even if it's going to succeed in that direction. But I hope that's clear about the traps. Always ask yourself on a failure, how How many people do you think are going to get fooled going short there or going long there? And if you don't, and why are you the only one seeing it? Are you smarter than everybody else out there? Especially if you've only been trading for a few months. If you ask yourself that, you'll probably understand that you're the one probably getting trapped and going to get fooled. So it's kind of like the old thing around the table. If you don't know who the lackey is at a card game, you're probably the lackey. So same kind of deal there. If you think you're, if you're wondering if this is a trap and you think you're outsmarting everybody, you need to know that you are. And generally it'll look really good to one direction versus the other. And this wasn't a very good second entry short to begin with because that's your signal bar. Understand that your signal bar is always the lowest or highest bar in the swing. So this is your signal bar if you were going to take a second entry short, and that bar is too bullish. It's almost neutral, but it's more bullish than it is bearish, so that's not a good signal bar. And you see what happened. You got trapped instantly there, and it goes higher. But if you did just use the signal bar to, even if you couldn't read the chart, if you could just look at that signal bar and say, hey, that doesn't fit our criteria. It's not, the signal bar is not bearish enough. That keeps you out of a bad trade. So you're just sitting on the sidelines, and then suddenly you see it turn down and fail and turn up. You say, hey, there's a trap there. Since I didn't get in, I can see the trap. I can ride that trap, and you got a quick, easy winner instead of getting sucked into a bad trade right there. And that's what happens to most people. They get sucked into the wrong side, and then it reverses on them. So I hope that makes sense. But you notice the new low, and you get a first entry, and then you take off up there, and now you got a second entry. Here's the other thing about second entries. The whole idea behind second entries is that they are two legs of correction, and then the trend continues. I mean, here's a second entry right here. Notice there's a leg back, a correction, a second leg back. That's two legs of correction, and then the trend takes off again. It finds resistance there at the overnight highs, but still that was an easy trade. And so just to clarify this, because I had a trader send me something, and he was saying that he saw some of the stuff from the day one traders, Michael Shin and them, and he says it's not the same thing you're teaching because they're talking about two legs correction. Well, you'll hear me talk about a two-legged correction. It's a second entry. It's still the same thing. It's two legs of correction in a trend, and then the trend starts back. The market moves in twos. That's the whole idea behind it. So if you're looking at a second entry and you don't see two legs of correction like that right there, then your second entry may be suspect. Like right here, this is just choppiness. Yeah, it's still crawling up this trend line, but look how sideways we're going. And second entries are failing in both directions. That's just congestion or a range, and you're better off to stay out of it. Here's a nice second entry short. It's not a very good signal bar. It's very neutral. But notice we got a leg down, and then you got two legs of correction. So that's a two-legged correction and a second entry short. That's all a second entry is two legs of correction. So people get hung up on looking for the breaks. And let me give you an example of one that's probably not a good break. See if I can find one here. I'll pause it. Well, this is not ideal, but I'll just show you this. But notice how we're coming down here, and you get a break higher, and then you come down here, and you get a break higher. There's two legs of correction there, but it's not real obvious. So it's not a great second entry. I mean, that's not the best example, but that's kind of what I'm talking about. A lot of times you'll see prices making a big move down like this, and right here it happens to break higher by a tick, and then it just keeps going, and all these bars are red, kind of like this right here, and you get a little break higher. Technically, that's a second entry right there. I believe it is. You're coming down, you get a first entry. Yeah, that's a second entry right there, but it's not a good one. And so that's kind of what I'm talking about. That's all one move down through there. And even though you got a little tick higher there, it's just a little temporary. It's just a correction there in the continuing trend. And notice, if you look at this in the end, there's leg one and there's leg two. It's basically two perfect measured legs. And that's how you find your measured legs. Um, and that's what you're looking for. So you don't really see two legs here, and really what it happens, there's two little legs in this bigger leg. But hopefully that makes sense to you there. Just because you see a break higher doesn't mean that, and it's a second entry, or if it break lower, it doesn't mean that it's a great entry. I wish I could find a real quick example of one that looks really good. Anyway, I hope that makes sense. But that's really what I'm trying to get out there. But just remember on traps that ask yourself, are a lot of people going to get fooled entering in the wrong direction here, and or am I the lackey here, and I'm just over thinking this thing, and I'm really the one that's about to get trapped? And just ask yourself that. And if you're not sure, then don't trade it like a trap. Just sit idle. You're better. Look, in this business, no trade is often a good trade. If you're not sure that you're reading the price action right, then what are you doing? You're gambling. And if you're gambling, you're not going to make it in this business. Gamblers do not make it in this business. The only way you make it in this business is if you keep the percentages on your side and you win more than you lose. If you start gambling, if you're trying to play this as get rich quick and you're gambling and trying to hit the big times, you're basically going to be a donator. If you've never heard me say that, basically the market needs donators. It needs people that don't know how to trade, that come in and keep liquidity here for all the smart traders, the handful of smart traders, somebody to take their money from. So don't be a donator. If you're not experienced, you definitely don't need to be trading. But get on the simulator, save your hard-earned money. I get letters every day, emails every day. I'm on my second or third or fourth or even fifth account I've blown. And I say, how long have you been trading? 4 months. If you try to trade this market, particularly in this volatility, and you've been trading for 4 months, you're a donator. Don't take that wrong. That is good advice for you. You're a donator, and donators are better off to sit on the sidelines and sim trade so that one day they won't be a donator. But you can't learn this trying to trade live. Never in a million years will you learn it. If you can't do it on the simulator, you can't do it live. So make sure you can do it on the simulator first. So one other thing I wanted to talk about was double tops and double bottoms. When you see a double top or a double bottom, let me find a good one. This is basically a good double top. People ask me, is this the new high or is this the new high? And a double top doesn't have to be exactly to the tick. You can see that that's basically a double top. But most of the time, like right here, they'll be equal. But you can count this as a first entry or a zero. So you could count this as the new high and go first entry and then second entry if you wanted. But you're better off to count this as the new high. And you see by doing that as first entry, and then you get a second entry there, and it goes higher from there. So it all depends on the context, how you probably want to count it. But you can count it both ways. And if I really like the second entry, I may take it. In this case, you went back under this resistance on a failed breakout. So you already know you don't want to go long right there. So in this case, I'm probably going to count that as the new high, and that is the first entry. And then the second entry works suddenly. So hopefully that's clear. And that leads me to the gambling part. Before I forget, I want to talk about this. I talked about it last week. I said I was going to talk about Forex and spread betting. It's amazing how many people come in that are spread betting, and they think it's great because there's they advertise that stuff as no commissions and no taxes. Well, guess what? The reason they don't charge any taxes is because nobody makes any money at it. And Forex is not much better. It might be a little better, but not much, because in both of them, you're not betting against the other trader like you are in the futures market. Also, they're not very well regulated. So you're trading against your broker who sees all your trades, who knows where your stops are. When you're trading against another trader, he doesn't know that if you went long here, your stop goes down here. He might suspect that because he knows that's a smart place to put it, but he doesn't know that for a fact. He doesn't know where your stop is. But if you're trading against your broker and you enter right here and you put your stop right here, well, he knows that. If he, a lot of times these brokers will run the prices back down there and stop you out, only to let it go higher. I tried to trade Forex long ago, and because it seemed like a really great idea, but it didn't take me long to figure out that you can't make money trading Forex, and spread betting is no better, it's worse. And the reason is because it's not regulated. You can look at one broker and they'll say price is traded at this price, or let me phrase this easier. Well, let's say you want to know what price is traded at 10:58 in this market. You can look on any chart, any broker, and you'll see exactly what the price was at 10:58, and it'll be exactly the same. And they can't hide that, and they can't change that. But if you go over to Forex, one broker might have showed prices trading down here, and the other showed prices trading up here. And prices may not have ever broke higher right across here and run any stops. But in Forex, your broker might have shown a trade up here to run your stops when the rest of the brokers showed prices never traded up there. So trust me when I tell you that Forex and spread betting is a waste of your time and you're never going to make any money because you're not. So especially not trying to scout. They're going to get your money, and they have too big of an advantage over you. So there's a reason, and they advertise that stuff as no commissions. Well, guess what? In the ES trading right here, all I have to do is get one tick of profit, and I still make, or one tick. I could scalp out with one tick on every trade. Don't try to do that, by the way, because it doesn't work. But if you could scalp out one tick on every trade and make money, because the commissions are so low and you're paying a reasonable commission. Well, they'll advertise Forex and spread betting as commission free, but what happens is there's always that spread in there. And so prices may be trading at, where are prices trading right now? Just to give you an example, see that blue and red line? That's the spread on this one. It's one tick in the ES. Even in the after hours when there's no volume, it's a one tick spread. Well, if this was in Forex, and see it went two ticks there temporarily, you won't see that much in the regular market, but you'll see that in this overnight. So even in the ES and overnight, you got a two tick spread right there. You won't see that very much. It'll click back to one in a minute. But if this was Forex, you'd see 2 or 3 ticks all the time. So if you buy right here, you can't sell except for where that and also you have to pay those 3 ticks in there. So that's what the broker makes. So it's not free. And you might have to get 4 or 5 ticks just to break even or make a tick. Where me in the ES during regular hours, I can get 1 tick every time and make a profit. Where you prices have got to move 3 or 4 ticks in your favor just to break even. So it's not free, and it's not commission free for sure. And that's a huge disadvantage, especially if you're scalping. Because think about it, if you got to get 3 ticks to pay your broker, and then you got to scalp out 4 ticks, and it takes an extra tick on 4, so it really takes 5 because a limit order has to tick through. So 5 plus 3, that's 8 ticks to get your 4 ticks. Where in the ES, I only have to go 5 ticks to get my 4. And sometimes I can get out on 4 ticks of movement and get my 4 ticks. So I hope that makes sense. But stay away from spread betting. Stay away from Forex. If you can't trade in the U.S., find a regulated futures market in whatever country you're in. You'll be better off trading it. So the whole idea that it's tax-free and commission-free, those are all internet market. That's marketing scams that fool you. So that's my take. I don't believe in them. I think you'll get ripped off. I've tried trading them myself and I got ripped off. So I know from experience how they operate. I saw them, my broker said prices traded way up here and took out my stops. And I went and looked other places, and they didn't show any prices trading up there. They just knew my stops were there, and they were trading against me, so they ran my stops, or said that prices ran them. And that's the thing. They can make a little trade at one price with another bank if they want to, but every other bank didn't have to say prices traded at that price. So it's just not regulated well enough, and it's not, you can't trade like that. You want every trade, no matter what broker or what trader, they ought to see the same price at the same time on every trade. And if you're not seeing that, stay away from it. And you're not ever going, that's what happens in spread betting and in Forex and all that stuff. And I know they do advertise some brokers now that are supposed to be, um, that claim that they don't trade against you anymore. They try to match you up with other traders, but they'll still match you up the same way. If another trader has a stop up here, they'll match you up and still run your trades, say, because it makes them money whenever you have to, they get a part of every trade. So they'll still, the same thing will still happen to you, even though you're not trading against them. If based on the way they're telling you they're matching up trades, you're still getting scammed. So because it's not regulated. I didn't mean to spend that much time on that, but anyway, I hope that's helpful. We talked about double tops, we talked about traps, talked about Forex. So I think that's going to do it today. We're almost 30 minutes. So the price action did look a little early on today. This looked much more, it looked like the volatility was going to be down. And I think it's still down some compared to what we were seeing. You're not seeing these 100 and 200 point moves in both directions in the same day, but I mean, really, if you look at where we started at 2460, I mean, it's almost a 200 point move today. Well, it's not quite that far. 2460 to 26. So it's 100 plus points, but that's still a pretty good move for the day. But it's not the 100 points in one direction and 100 points in the other, and 100 points and maybe 200 down. Or I'm not convinced that's over yet, but the market's definitely trading more orderly than it has been. And maybe it'll continue, and maybe the volatility will continue to dwindle. And one other thing real quickly before I wrap it up, I get a lot of questions about the 2-point rule that we supposedly follow. You can't use the 2-point rule in this market, and I've mentioned this a couple of times, but we have a lot of new people coming in. Just assume you want to enter here, and this bar is, I don't know how many ticks that is. It might be enough to get in with the 2-point rule. Let's just look. The range on that bar is 15 ticks. So no, even on that bar right there, you can't get in on the 2-point rule. If you put your buy stop here, it takes 16 ticks to get below your stop where it goes below the signal bar. So there's a couple ways you can handle this. You can either let it break higher and put the, to trigger the trade and drop your limit order within the 8-tick rule and see if prices will back up after it triggers and fill you, which is the best trade you'll miss. Probably in this one right here, you probably wouldn't have got filled and you missed that trade. The other thing you can do is put your buy stop where it goes, and since it takes 15 ticks, that's an additional, and just take your 8 from your 15. That's an additional 7 ticks that it takes to put your stop where it goes. Add those 7 ticks to your 4-tick target to make up the difference. And you can see you easily could have got that here by doing that way. So I hope that makes sense. But just add the difference. Same thing here. You got a high or low. You might have wanted to go long right here. If you did, and this was let's just say this is a 20 ticks, and you're only allowed 8. So that's an additional 12 ticks to get your stop below the signal bar. Add those 12 ticks to your target. So your target would be 16 ticks instead of 4, because you're adding those extra 12 ticks to your target. And again, you can see you easily would have got that. So that's the best way, I think, to do it. Of course, that's a lot of dollars for people in a very volatile market. So it's a lot more risky. You're risking a lot more money with 15 ticks versus 8 or whatever. So keep that in mind. And prices have to move a lot farther. Really, the movement, if you're reading it right, the movement's not really an issue. You know, personally, I usually don't worry too much about the 8 tick stop, but if you're new to this and you're trading live, you've got to follow that rule or you'll go broke. Most of you will go broke too quick. So it's not a rule to slough aside. You got to find a workaround for it. So the workaround is either the limit orders, letting the trade trigger and then dropping the limit order and see. And again, you see prices would not have come back here. And you got left out of a really quick, easy trade. And that's a second entry, a high or low. The trend is up. That's your first break. I mean, that's a great setup right there. Here's your trend line working up. So that's your first break. And notice that's a new high. So you're coming down first entry and then second entry. So that's a second entry long. Great signal bar. You got plenty of room back to the EMA. It's a higher low than that one. Really, you could look at that as a double bottom. That's really a double test because you got a low right over here. So there's a lot of reasons to like that trade. Notice you made the low, you test it once, you test it twice. It's a higher low, it's a double bottom, it's a second entry, it's a great signal bar. I mean, that's as good as it gets right there. It's got everything you want for a good trade. So study that trade. If all that doesn't make sense, listen to what I just described and study it till you get it, because that's as good as it gets right there. So if it wasn't so late in the day, prices might have taken on off and it might have even gone much further. So, but anyway, this is way over 30 minutes. I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.